3 stocks that I think should be on your radar for November 2018. Let's get started. What's up, everybody? My name is Ale and welcome to my world of stocks. By the way, if you're new to this monthly series, this is where I talk about 3 stocks that I think have a tremendous amount of long-term potential. So looking at 5 to 10 years out, I think that these stocks have a lot of potential. Now, if you want to know exactly what these stocks are and you want to jump to a specific part in the video, I created some timestamps for you guys in the description and as a pinned comment down below. But if you guys like this monthly series, could you please let me know by hitting the like button and subscribing, as those 2 things really help this channel survive and grow even bigger. Last month, we broke a channel record with over 600 likes, which is just mind-blowing to me, but I really want to say thank you for all the support. It really means a lot to me. Now, as you guys know, I like to give you a wide variety of stocks every month because I think it makes this a little more fun. If sometimes we're looking at some safer stocks, some value stocks, sometimes we're looking at some more speculative stocks that have a little more risk or are a little more volatile, but that can kind of backfire sometimes, to be honest, because it kind of attracts a little more criticism as well. But just kind of keep that in mind. This month is no different. We're looking at a wide variety of stocks. So stock number 1 is going to be what I would consider a much safer stock, and it is a very good dividend growth stock for the long term. Stock number 2 is going to be a gaming stock that we have covered a lot on this channel already, but they've recently released one of their newest games and it's getting a lot of praise, and I think it has a lot of potential. So I've actually been buying this stock quite a bit recently, especially on a dip. And then stock number 3 might be the riskiest stock that I think I've ever covered on this channel, but it's a very low market cap. It trades for less than $2 a share. So that alone is going to get me a few dislikes on this video. But this is a very cheap stock, and I just really wanted to mix things up. So I really wanted to talk about this stock. They actually have a product that is coming out soon. It's not available commercially yet, but when this product comes out, I think this product is going to be revolutionary. And it's like a really big innovation. So I think that they have a tremendous amount of long-term potential. But with all that being said, let's go ahead and get started. Let's jump into stock number 1. All right, guys, now stock number 1 is probably the safest stock with the largest market cap, and that is Texas Instruments, ticker symbol TXN. I'm just going to refer to them as TI because Texas Instruments is kind of a mouthful. But they have a market cap of around $100 billion, and they currently trade for around $100 a share. Now, the biggest reason why I like TI is because they are a fantastic dividend growth stock, but we'll talk a little bit more about that later. But when looking at their price, they're actually down year to date, which makes it a lot more attractive. And I feel like their price is kind of in the sweet spot right now because their 52-week high is much higher at 120 and their 52-week low is a bit lower at 92. So they're kind of a little bit in the middle, but closer to the low. And then their PE ratio is pretty reasonable at 23, but it gets even better with their forward ratio at 16. And it's also trading lower than their 50-day moving average and even lower than their 200-day moving average. So their current price just seems like the sweet spot. It really seems like a good entry point for what you're getting. So what exactly are you getting? Well, Texas Instruments is mostly a semiconductor company. They are famous for their calculators, but they really focus on making chips for not just personal electronics, but also for industrial use as well. So when looking at consumer electronics, they make a variety of chips and or components for things like TVs, home appliances, and even Apple iPhones. And these personal electronic chips make up around 1/4 of TI's revenue. But where they're currently seeing the most growth is in the energy and transportation markets, which account for more than half of TI's revenue. And these are markets that are rapidly becoming more computerized. And we know that when anything becomes more computerized, it's going to need more chips and components, things that Texas Instruments not only designs, but also manufactures themselves. When you think about the transportation market and you think about these cars becoming more and more autonomous and more computerized by the year, Texas Instruments really stands to benefit from all that. So they see the automotive market as an area where they can potentially have the most growth for years to come. And when asked about their strategy and what they're investing in the most for the future, during an earnings call, their VP responded by saying, "I would describe our growth primarily coming from industrial and automotive as we look over the next decade. So that's where we've tried to increase spending. But we will shift spending around to take advantage of things like 5G as well." And even when looking at recent performance, it's been very strong. In their last quarter, they reported revenue up 9%, net income up 33%, and their EPS was up 36% year over year, all of which exceeded Wall Street expectations, and they even increased guidance as well. But the reason why I like Texas Instruments so much is because this is one of the companies that really cares about their shareholders the most. In fact, they've reduced outstanding shares by close to 50% since just 2004, and that's led to their EPS rising by over 300%, despite revenue only growing by around 59% over that same time period. And they've already approved another $12 billion share buyback program to reduce those shares even further. Now, I mentioned that I really like Texas Instruments for their dividends as well, so let's cover that really quick. Now, their yield is really good at above 3%. Their 5-year growth rate is fantastic at 24%, which, by the way, they just raised their dividend again by another 24%. And they've been increasing their dividends for the past 14 years. So this is actually a fantastic dividend growth stock. Now, their payout ratio is around 50%, but they've been rewarding shareholders so much by reducing their share count, so that 50% payout ratio is more than acceptable for me. So to sum it up, this is a pretty good company that has pretty good performance, will probably continue to have strong performance because they're investing in markets that are growing, and that really cares about their shareholders with share buybacks and some really good dividends that have been growing for a long time and will probably continue to grow. So I think this stock is definitely a good long-term dividend growth stock worth looking into. It's been a little volatile this year, so I would consider trying to find a good entry point, but even at its current price, it kind of looks pretty attractive to me. So I really like Texas Instruments at the moment. All right, guys, now stock number 2 is Activision Blizzard, ticker symbol ATVI. And I know I've covered this stock a lot on the channel, but they just released one of their newest games, and I think it has huge potential, so we got to talk about it some more. Now, I actually own Activision stock, and I recently purchased more with all the recent volatility that we've been having in the market. So I purchased some more at around $74, but they're currently trading at around $77 per share, and their PE ratio is definitely high at around 118, but their forward PE ratio is much, much better at around 25. Okay, so why am I so bullish on them in the long term? Well, they own huge IPs like Call of Duty, Overwatch, Destiny, Diablo, Warcraft, just to name a few. But the reason I like Activision right now is because of Call of Duty. They just released their newest iteration in the popular Black Ops series with Call of Duty Black Ops 4. And the reason I'm so excited for this one is because they have a blackout mode that is essentially a battle royale mode very similar to that of Fortnite. Now, you're probably familiar with Fortnite. This is a game that took the gaming industry by storm this past year and has already generated over $1 billion in sales. So you can see why Call of Duty introducing their new blackout mode is very important to investors. And the cool thing is that they're probably not going to have a whole lot of competition because Fortnite is much more of a cartoony kind of style game. And their only other real competition would be PUBG, but PUBG has been seeing very bad performance on consoles. Well, I say consoles, but it's only available on Xbox and PC, but that's not performing very well on Xbox. And so then the only other option would be EA's Battlefield 5. But even then, Battlefield 5's pre-order numbers were 85% lower than Black Ops 4 because of horrible PR from Electronic Arts. And they even had to delay the release of Battlefield 5 by an entire month, giving Activision plenty of room to get a head start on both attention and sales. Now, when looking at the gaming market in general, that's estimated to be worth around $180 billion by 2021, with mobile games making up the majority of that at around 60%. So you might be asking, okay, who owns some of the biggest mobile games that stands to benefit from this? Well, Activision acquired the mobile game developer King Digital, which released Candy Crush Saga over 6 years ago, and in the previous quarter, that game brought in over $200 million with growth of 18% year over year. Do you realize how impressive that is for a game that was released over 6 years ago? I mean, it's insane. And on top of that, they're currently making a mobile version of their Call of Duty game, and they're even partnering with Tencent to release it in China, which is a huge market. And if that wasn't enough, Activision even has a studio division that is currently working on creating a cinematic universe for some of Activision's biggest IPs like Call of Duty. And when the head of the division was asked about it, he compared it to the Marvel Cinematic Universe. Now, I'm not saying that they'll be anywhere near that in terms of attention or revenue, but the fact that they're even aiming for that type of quality, I think is a big deal, because you don't really see any of these other gaming companies having this kind of cinematic ambition. And even when you look at esports, which is like tournament style gaming events, that market brought in $655 million in revenue last year, and it's expected to grow to over $900 million this year and reach $1.65 billion by 2021. So that is really good growth. And I would argue that with huge titles like Call of Duty, Destiny, Overwatch, and others, Activision stands to benefit just as much as anyone from that type of growth. And if all of that wasn't enough, Activision is still a really good dividend growth stock. It's actually one of the biggest reasons why I'm personally invested in Activision. When looking at their dividend yield, it's pretty low at only around 0.5%, but since they started paying dividends 8 years ago, they've increased those dividends every single year, and they currently have a 5-year growth rate in the double digits, and they've even increased those dividends this past year by 13%. Not to mention that they have an insanely low payout ratio of only around 11%, so they have an enormous amount of room to keep growing those dividends out in the future. Also consider that there aren't very many gaming stocks that actually pay out dividends in the first place. So with the esports and gaming markets booming, incredibly strong IPs, a presence in all gaming segments including mobile, a future presence in movies, and a growing dividend, I think Activision Blizzard is absolutely a stock worth looking into, especially with the recent release of Black Ops 4 and their Battle Royale mode. I think it's probably going to perform pretty well. It's looking like reviews are very strong. So I would definitely consider Activision Blizzard, especially if you can find it on a dip, which, by the way, Activision has been a little volatile lately, so it might not be that hard to find. Okay, now stock number 3 is Patriot One Technologies, ticker symbol PTOTF. Now, let's get this out of the way because I can already feel a lot of dislikes coming. This is a very high-risk, speculative stock that trades at less than $2 per share and has a very small market cap of around $200 million. It's also very volatile because their flagship product is not available on the market yet. So they've just been operating in the early stages of funding, development, and testing, but their product is expected to go on sale next year along with other products as well. And I think that they are going to see very strong performance in the long term. So because of all this, you absolutely need to do your own research and make your own decision, but you absolutely need to do a lot of research before you even consider this stock because it's trading very close to its 52-week high and it's well above its 50-day moving average. So I would ideally look for a lower price, especially with all the recent volatility and kind of fear that's going on in the market. I really don't think it'd be that hard to find a lower price. But if you're still with me, then let's take a look at this company. Let's see why I'm so excited for their future. Now, this is a Canadian company that develops radar systems that can detect concealed weapons in public locations through a combination of equipment and computer software, and their flagship product is called PAT-Scan. So the way that their system works is that it transmits radar waves that are then analyzed by their software to create an image. And if that image contains a weapon, then it'll compare it to other images of weapons in its database and it'll try to see if there's a match there. And if there is a match, then the system gives you an alert saying, okay, this person has either a gun or a knife or a grenade or some other kind of explosive device. It can really detect a lot of different things. And it's pretty fascinating technology because the equipment can even be concealed behind walls, behind furniture, all kinds of other things. So it can really be placed anywhere, but it's usually for entry points to create kind of choke points so that the software doesn't get overwhelmed by too many people going through it. And on top of that, they've been investing a lot in machine learning and artificial intelligence so that their algorithms and their software gets better and better over time. So the more that you use it, it actually gets smarter. And so what it does is that it'll start to recognize patterns, behaviors, and even different types of weapons. And then it'll take that information and it'll share it across its network with all the other systems that are out there in the market. So basically, it benefits anybody who owns the device because they're all kind of sharing information. So all these systems are continuously becoming smarter and smarter because they're communicating with each other and helping each other learn. I know that they've recently been working on detecting liquid explosives and even strange behavior patterns from people and cars. So like if people are moving around in a weird way, if they're stalling and if they're kind of taking their time somewhere, or if cars are stopping in somewhere where it doesn't usually see that kind of behavior, then it can send out an alert and say, hey, you should probably check this person out or check this vehicle out because it's acting much differently than what we usually see. But can you guys imagine the potential here? I mean, this really is the future. When we think about technology increasing public safety, this is what we're talking about. And also think about what a divisive topic guns are, right? Like here in America, I constantly see people fighting and arguing about guns. It's a very divisive topic. Like one side is very anti-guns, one side is very pro-guns, but no matter which side of the aisle you're on, you could probably support this type of technology. So I see this product getting very good PR. I don't really see how you could spin it in a negative way. So I could easily see this type of technology being used in schools, malls, concerts, hotels. You know, with the rise of mass shootings or in school shootings and shootings in like churches and places of worship, this technology just makes absolute sense. Not to mention that I was reading one report that said that PAT scan costs about a third of what metal detectors cost, and Patriot One builds them for about a third of what they're charging for. So it's kind of a win-win situation. Customers will be saving a lot of money and Patriot One will be making a lot of profits. Not to mention that they also bundle this with a subscription service. And that's a big deal because this isn't just a one-time transaction. This is a monthly or yearly subscription service and a continuous source of revenue. Now, currently the PAT scan product is being tested in places like the Westgate Casino in Las Vegas, North Dakota University, and several other places. I know some places of worship are using it. I know there's a law enforcement agency that's also using it, but most of them are reporting accuracy rates around 95% is what I usually see. So that's pretty good accuracy rates. And they recently got FCC approval, I think about a year ago, which was a big deal because that basically approves them for commercial release. And they currently have over 9,000 different leads, and they have hundreds of backlogged orders with plans for commercial release by Q1 of 2019. And they're currently scheduled to enter markets in 11 different countries. And then when looking at the value of the physical security market, that was at $78 billion in 2016, and it's expected to climb to over $150 billion by 2023. So this is a massively growing market that's already very big, and it's going to get even bigger in the future. So my overall opinion is that this is a stock that has been climbing in share price recently because of things like the FCC approval and the fact that they're getting very close to commercial release. But at the end of the day, we're still not there. We're still not at commercial release. That should be happening next year. So if you want to wait for that, I wouldn't really blame you. I think a lot of people, a lot of speculative investors are kind of flooding into the stock right now because they're thinking, hey, I can get it cheap now and then it's going to take off in the future. But again, that's speculation. We don't know that for sure. So I would advise extreme caution, but I would also advise that you really should keep an eye on this stock because I really think that in the future, just my personal opinion, but in the future, I think that this stock will be trading either much higher or it'll basically get acquired by a bigger company. Either way, it's going to be worth a lot of money in the future, I think. I don't currently own the stock. I would like to wait a little bit because there's a lot of volatility in the market right now, and a stock like this, I could easily see get hammered if we get like a bigger correction. But anyway, that's all I've got for you guys today. I hope you enjoyed the video. I try to give you guys a wide variety today. So we had a good dividend growth stock, pretty safe stock in my opinion, with stock number 1, Texas Instruments, a semiconductor company. Stock number 2, a gaming company that I think has a lot of potential, and their newest game I think is going to sell very well. And then stock number 3 is an extremely, speculative stock, but man, they could have some huge potential. That product, that PAT scan system, that could be huge in the future. So anyway, that's definitely a wide variety of stocks. I hope you appreciate that. I hope you enjoyed it. Please support the channel. Make sure you subscribe. Make sure you hit the like button. It really helps me out a lot. Thank you so much for watching. I hope you all have a wonderful, beautiful day, and take care. Bye-bye.